Good afternoon, ladies and gentlemen, and welcome to the Scott Gold Resources Production, Operations and Strategy Update. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company review all questions submitted today and will publish those responses on the Investor Meet Company platform. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to CEO Phil Day. Good afternoon.
Right. Good afternoon, everyone. Thank you very much for attending. I think it is a first of hopefully many webinars. So obviously, as it was introduced, my name's Phil Day. I'm the CEO of Scott Gold, and I'm joined here today with my CFO, Sean Duffy, who can introduce himself.
Hi. Yep. Great to be here.
Thank you very much. So today it is coming to the end, or coming to the near end of Q2. We've had some very interesting things that we've been doing through Q1 and Q2. We thought it would be justified and great to be able to show our investors exactly where we're at, because we are really changing the platform or the direction of the company at the moment. So it gives me a great pleasure to run this today, because there is some very, very interesting news I'd love to get across to all of my investors. So here we go. I'm going to start with first slide, which is titled Transformational Year of 2021. In the AGM, we started out trying to get this point across that in 2021, we really had to do a lot of digging in, turning the company around work during that time. It was a very big challenge. We had lots of COVID issues. We had lots of bringing on people, trained people, competent people issues. So we started out with, I think we had 10 or 15, and we ended up at the back end of the year getting up to about 80 odd people. We had to accommodate these people. We had to try to make sure that the process plant in the mine was commissioned. We had to develop the mine. So we effectively just had to break down the year into quarters and try to make sure, or not try to make sure, but absolutely hit our targets in each one of those quarters, so that we knew by the end of the year we could get a nice stable platform to go into 2022, because 2022 was a very, very important year for growth, which we'll go through in step by step. So in summary, in Q2, we redesigned the mine schedule, got the process plants, critical spares and the like all in place. We implemented planning practices. We got to a point where production revenues were exceeding operational costs. Then we got into the back end of 24. We got some record production numbers. We got gold concentrate sales in close to about 3 million mark, or 2.6 to be specific. And we ended up the year quite well. We went then into 2022 in the first quarter and announced that quite clearly in the AGM, that we had to go through a quarter of really hard times. We had to dig in and we had to develop out the mine. And we came through that. We came through that, without too many battle scars, and we got through. And then now we're into Q2, and we obviously released an RNS today, which I'll go through later on. But we've hit some very, very, very interesting gold areas, and we've hit some big targets, and actually starting to get closer and closer to the top end of our guidance, or if not, actually the higher than that. So what is that we have that we are so proud of is, firstly, is the mine itself. So the mine currently, as we know it, has a total resource of 266,000 ounces, which is estimated value in today's gold price of 360 million. And along with that, with silver as well, we have proven and probable reserves in those numbers there. And effectively, it means that we have a process plant that is fed a grade of 11.5 grams per ton. Now, there's not many mines in the world that I know that have that sort of numbers. So this particular resource, for me personally and for the team that I've got, is just wonderful. It seems to give all the time. Every time we develop out to certain areas, we seem to be more and more surprised at how well the gold, or how much higher the gold seems to be. So This I can't talk about enough. It is a wonderful resource, and it all is pinned about this particular, the actual mine itself. Once we actually process it, it's very easy to process. It floats very easily. We get very high recoveries. The material itself, though, can be quite hard because it is associated with silicates and the like. But overall, the process plant has performed very well, principally because the material in the ore is fantastic. So as I talked about, process plant is quite simple. We've put up some videos and like to try to show it to all our investors. It consists of a fairly rudimentary crushing circuit and a milling circuit and flotation. But the back end of the process, again, which gives me I'm so proud to be able to announce that we have a tailings filtration circuit, which is called dry stack tailings. It enables us to not have tailings dams, which a lot of mines around the world have had multiple problems with them, with cave-ins and wall collapses and environmental disasters. We just do not have that problem because we dry all of our tailings through this filter, and then we put them into the undulating holes on the side of the mountain to make sure that they're not an eyesore. So when we finish mining at the end of the life, we will not be having eyesores that forever other generations will have to deal with. Again, that's a wonderful decision that was made way back, and again, it just makes me proud to be able to run a place like this because I know environmentally I'm just not making any impact for future generations, negative impacts. Right, as I stated, 2022, we are positioned for growth. So I showed this graph in the AGM, and it turned out in Q1 that pretty much replicated what we thought, that we're at the lower end of our gold production. That was done by deliberate intent. We had to do development tunnel mining. For that, we had to literally just go for it, and we had not a grade control model that enabled us to understand where the gold was on a meter by meter basis. We had gold indications based on our resource, which is 25 by 25, which meant that basically if gold came, if it didn't come, we weren't 100% sure, but we had to do it. It was just one of those things, which is why we announced that we had to go get a short-term loan from time to time. We also had impacts to our shipping when the unfortunate Ukraine-Russia war started out. It caused all sorts of concerns for us. We just could not get revenue in as we needed it. So it was a very difficult time, and I don't really particularly want to remember anymore because it was difficult. But we then went into Q2, and as soon as we hit Q2, or the back end of March and into April, we hit our second stope, which is our CAF stope. And as soon as we went into there, we went straight up to 35 to 40 gram per ton. Gram per ton gold is what we were seeing coming across to the process plant. We developed the bottom end of that CAF, and both April and March blew away our gold production that we ever thought. So we ended up by having obviously a lot more better revenues, and we're able to catch up for all the issues that we had back in Q1. And where I stand today in June, I've hit a number that I obviously can't tell until at the end, but it is indicating that I'm going to be definitely on the top end of guidance, or if not above. So once we get through Q2, though, we're going into Q3 with our thickener coming in place because the company over in Switzerland, Fern Wealth, we were very lucky that they were able to provide us a loan to be able to bring money forward and enable us to purchase the equipment and the things that we needed. So we're able to purchase our thickener. We're able to get into our detailed development drilling that we need to do so we can understand where the gold is on a meter by meter basis. It enables us to do all of these wonderful things and also get prepared for 2023 with our ore sorter. So with the thickener coming in July, August of Q3, along with our better understanding of the mine and our better development, this is why we're very sure that when we go into Q3 and Q4, our growth of gold revenue will go along that trajectory as I'm showing here in this graph. Right, so I'm going to go through May and April again. So specifics, we produced 1,984 ounces of gold, so we're over 10,000. We had sales of 2.4 million just across those 2 months. But in the development of the mine was the key one. We did I didn't add to this for this month, but we did 325 meters of development tunneling, which enabled us to get straight into CAF 2. And we've now done the bottom cut of CAF 2, and we are backfilling it currently. We did such a good job that we got to close to 1,000 tons on our stockpile. So as we're filling up the bottom, getting ready to do the second cut, process plant never runs out of ore. And we're continuing with our optimization, and we're on track, like I've repeated a few times here, to get to the top end of our guidance. Right, going forward, as I said, with the monies that we were very lucky to get from Fern Wealth, we've been using that on a process plant for quite a lot of things, big things like the ticket items, like the thickener was obviously mentioned, but obviously we did a lot of other things. We've got the process plant currently sitting at around about 92 to 95% availability for being able to bring a lot of those initiatives forward. Though we're going to be doing now the same thing into the mine to make sure that we get all of our mining fleet into that sort of area as well. And like I said, as soon as we get the tailings thickened, this is going to be a big step for us. It's going to debottleneck our process plant completely. And at the same time, with our better understanding of the mine, we're going to be feeding from the mine straight into a process plant at a much higher level. And with the grades that we're seeing, if we're able to do that, then like I said, that's why the previous graph had gold traveling up like that. And going into 2023 will be our last major initiative to make sure that the mine, when it actually is able to be stoping at multiple areas so that we can actually be able to process it correctly. We call that what it used to be called phase 2, probably still do call it phase 2, but it's now phase 2 with an ore sorter. The ore sorter test work we're doing it with 2 companies to make sure we get it right. Once we have actually made the decision to do it, then we'll obviously purchase it and put it in place. What it will do is we'll basically enable our crushing circuit, which is already sized for phase 2, to be able to run full time, because currently we just have to campaign it on and off, but it'll be able to run at full time. And then we select the ore that we want, which is the gold, with minimal recovery losses, and we'll be able to use the waste material from that in different places and effectively debottleneck the whole lot of the process plant, because then the grade itself will increase through the mill into flotation and the like. We'll be therefore reducing the amount of tailings material that we'll make for every unit of gold as well, which is a nuance that I'll explain later in the year if it does work quite as well as we think, because it means that for every gold ounce that we actually produce, the amount of tailings per ounce will actually go down, therefore prolonging our life of mine. Okay, so in summation, phase 1, where we're getting to, is an annual run rate of 36,000, which is a targeted rate of 9,900 ounces. But we're moving now into the 51,000 ton range, so to deliver 16,500 to 17,500 ounces with the thickener installation, plus also some other minor modifications done on the process plant that enabled us to get closer to that anyway. But the big one for us is to hit phase 2 expansion with the ore sorter next year in the end of Q1 of 2023. And with such a high fixed cost mine as we have, obviously every single increase in revenue that we're able to achieve with a fixed cost not really changing that much, hence what it calls fixed cost, it means that our profit actually increases substantially once we get up to phase 2. Right, optimization plan. So for the best way I could probably try to draw this on a graph or on a PowerPoint presentation, ideally it would be perfect if I could make a wonderful 3D model of this to be able to try to explain this the best as possible. But what this is trying to show is, on one side, the access portal. That grey area is where we have been developing all the way along the bottom of the 400, as we had said to the market a few times. CAF 1 is what we accessed through 2021, which helped us a lot. But then we continued on the 400 drive, and at the top of CAF 1, we also continued on the 415 line, which enabled us to get into the CAF 2. So now that we've got from one side of the mine all the way to the other side, which is close to a kilometre, if not a little bit more, it means that I can now access CAF 1. I'm accessing CAF 2. I can come back and access CAF 3. I can also increase through my waste ramp to get up to maybe another CAF 4 if I want to, or at the same time over near CAF 2, I'm going to start doing the development drilling and make sure I can actually access areas to do the long hole stoping as well. So it's potential that I might be doing long hole stoping and cut and fill stope mining to make sure that I always get my gold grade that I want through to the process plant and make sure we get the revenue targets that we need. Again, pictorially, I'm trying to get this concept across as to what the CAFs are versus what the stopes are. I'll try to do a better job here. On the back end side, or the left side of this presentation, is that 430 stope, or this slide I should say. That is at the traditional long hole stope that the whole mine design was premised on. We will get to that. But these CAFs along the way, like I said, are just enabling us to get better understanding of the ore body and at the same time better extraction, because we find the gold, it continues on a vertical basis far, far more predictively than it does on a horizontal basis, which is pretty normal for the mine. The differences between the grey and the red is the grey is what's already been done, and now the red is what we're doing currently. So in front of us, I have all of CAF 2 and all of CAF 3 to go with material to be able to feed my hungry process plant and make as much gold revenue as possibly can. This obviously doesn't say the whole picture, because like I said, I could stack CAFs on CAFs on CAFs on CAFs and just keep going all the way to the top, and I could also do it down as well, as long as I get my waste ramp up. But this is just to indicate what we're doing now in 2022 to ensure that we get good revenues as we're also making all of these new initiatives and growth projects. Okay, next point is, even though we've got a resource and a reserve that we know about currently, we know that we have done the amount of drilling on this to get the mine up and running, but that in no way, shape or form is really the total story. There are holes everywhere in this that we haven't got any ideas, and we need to start drilling further. And if we do, like I said, I've got 2 or 3 geos that I've had a look at this, and one that's working with me currently that believe that it's up to almost double the size if we just start not infill drilling because technically it's wrong, but filling up knowledge in the areas that we don't actually have at current. And that also is true for extending down as well. So because a lot of the drill holes, when they were done historically, were not done to the depth that they're really required. That's also just the Coninish vein itself. In around the Coninish vein, we also have all these other expansion targets. So signals or the like that tell us that the gold actually continues on to other veins. We have currently not drilled any of these areas, but for many years we've done a lot of geochemical analysis and chip sampling and a lot of other geological work to try to understand. And there are telltale signs that the veins could continue on in all sorts of directions. But we desperately want to just go out and put some drill rigs out there to really understand how big these veins could actually be. And then the real true story is we actually own 2,900 square kilometers of the same mineralized belt, which starts, or depends on which way you look at it, starts at Nova Scotia, goes through Northern Ireland into Scotland, and then ends up into Sweden. Again, we've done a lot of initial geological work, but we haven't put any drill holes in yet. But as soon as we've got our mine and our process plant up and cash flowing at the phase 2 level, we have the optionality to self-fund exploration if that's what we want, or if we can find some other investors that would like to join our wonderful story, we may be able to start exploration campaigns and try to find another Coninish vein. So this is where I'm going to hand over to Sean. Sean, being the CFO, will take us through the financial numbers of the company.
Yeah, look, I think that it's pretty much as it says there. We've got our gold price that we forecast forward, and that's pretty standard. So and nothing really. I mean, if I jump straight into the key thing here, I think is that this is a revenue game for us. So all of the things Phil's just spoken about around growth and optimizing is really what drives everything on this sheet, because revenue is the king, and revenue is driven by those growth initiatives, which gives us those extra ounces. Those extra ounces, then when divided by our very high fixed costs that we have, that component of our costs are quite high, you will see that the all-in sustaining cost per ounce will come down, and that's really driven by the doubling of output and those and ounces essentially, with not too much of a change in the cost base. So if that looks a bit weird, that's why that is. The first year we're not at our optimized growth phase. So once we move into that next year, you'll see the cost per ounce come right down. So that's the key thing here that you'll get from this, and everything else is driven off of that. So hence why our focus has been from the start, let's get it to steady state and let's drive the optimization and growth initiatives, because that's what really pushes us forward. So again, it's a revenue story, and that's been our focus. So in terms of the valuation, we are undervalued. SP Angel's broken note has us at £1.54. We're currently in the 70s, but I think as a product of if we continue to do the things that we set out to do and that we say we're going to do, and we prove concept that we can do the things that we've said we're going to do, I think you'll find that will then also drive, hopefully, the share price. I think that the key there, all I can say about that, as I say, that sheet, this whole thing, is growth. That's the driver, revenue. So just on that then, if I just can recap what the driving shareholder value means to us. So essentially production, we're targeting 23,500 ounces next year. Everything we've done this year is in line with that production and into optimization. The driver of those things, which is the thickener, which is, as Bill mentioned, it's on its way, and being installed very shortly, that is half paid for. We've got other initiatives that will drive our production up. All of this goes for our growth, and then that growth again will drive cash generation next year for our valuation. So we should be able to get through to our valuation price if we can. If we do the right things, then you've got to believe and trust in the market, I suppose. But everything that underpins that is basically we're on our way. So I think for me, it was good. It's been a good year. It's been a tough year, but essentially, yeah, revenue is the key for us now, and then to get that is our growth. So so what I think that's the wrap up, if you like, of the presentation. But we will go to some Q&A and answer some of those questions that we have. So
that's great. That's great, Sean, Phil. Thank you very much indeed for your presentation and for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Sean and Phil take a few moments to review the investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Sean, Phil, as you know, investors submitted a number of pre-submitted questions, and you've received a number throughout today's presentation. If I could just hand back to you, Sean, if you could ask you to read out the questions and where appropriate, give the responses, that would be great.
Yep, great. So one of the questions I have here, which was pre-submitted and it's actually just come up on this screen as well, is really, could you please explain the terms of the recent Swiss loan, as it wasn't quite clear what the loan was secured on? So the loan has come from a consortium of private high net worth investors managed through Fernwealth in Switzerland. And essentially what we've given, there's no security over the assets as such. It's a parent company guarantee from SCOTGOLD Resources Limited to each of those loan bearers that essentially we guarantee that we'll pay them back, if you like. So the interest rate is 7% per annum, and the loan term is 2 years from each drawdown. The only other thing on top of that was that each of the loan providers will get for a total of when we get to the £3 million, that 300,000 warrants will be issued at 78.83p for each of those holders on a pro rata basis. And then there was a fee to Fernwealth for 150,000 warrants, which was really the loan. So it's a 2-year loan with a 3-year warrant attached. So that's, and as I say, the parent company is the guarantee is the security. So that's that one. So question 2, we have, why did Nat LaRue step down as chairman? So I think I'll hand over to Phil for that one.
No problems at all. That's a good question. So what we've been trying to do with all of our presentations, including the AGM we had this year, is every single time we've made an announcement, we have worked very, very diligently to make sure that we at all costs achieve what we say we're going to achieve. We feel very proud about that, and that is the mandate of my whole team, is that if we're going to make statements, we better go out there and make sure we actually achieve them. So being as we went through 2021, every single time I spoke to Nat, he became more and more comfortable that he let me run the company, and when he made the decision for him to step down, it was the right decision for him, but he just felt very comfortable and enabled a changeover into Pete. So that's the best answer I can give on that one.
Okay, thanks. The next one was, when does the PLC expect to be profitable? I think simplest, without any more detail to that, the simplest answer to that will be that this quarter will be profitable. The growth next year that we're doing to get into phase 2, 2023, this will obviously drive a much greater cash flow, much more profitability. So if the intent of the question was, when do we become profitable as a company overall, I think we're already on that road now this quarter, but next year will be our biggest year by far, just because of those numbers that we've quoted. So that's that one. Question 4, given the historical reluctance of the markets to finance small mines, is it possible that the company could be taken private? So I think, Phil, you can take that one.
Yeah, so I'm not really sure the historical performance of the company is a real good reflection as to where the company's heading. So as we said right at the front, we know that this is a revenue game. We've been working very diligently in 2021 to get it up to a certain point, and in 2022 to make sure it grows, because of just a very, very high fixed cost basis, which is nothing that we can really do about. So as a result, once we get up to the phase 2, we believe that we'll be making a lot of money, and it will be a very, very interesting investment for people. So simple answer is no. We don't want to take it private. We want to keep it as a public company and attract investors.
Yeah, great, thanks. The next one I've got is that basically it says, is the company's share price suffering because of premature and misleading announcements in the past? I think for me, first year in operations are always tough. Can't answer for historical announcements, but what I can say is that the focus for us has been to stabilize the business, optimize, and now look at growth. That's what we're doing at the moment, and that's the focus for us. So the share price, as mentioned before, should follow if we just continue to deliver on what we've promised, as Phil just mentioned. And then I think that's all we can do. All we can do is go forward, continue doing what we've been doing, and just keep focusing on that, because it's working, and we're in a much better position than we are. So hopefully the market will see that, and investors jump on. But certainly, yeah, we just keep delivering. That's all we can do. Then I have another one, which was, how long, which is definitely for Phil, how long would the process plant be taken offline whilst the tailings thickener is installed, and are any gold sales being hedged in advance?
Simple answer is no. We don't have to turn the process plant off. That was never envisaged to do that. We've actually constructed the thickener over in Turkey, sent some people to make sure to witness that, saw it operating, saw the whole thing, and then they dismantled. And so this is a normal way to do construction. Then they dismantled it, put it on the back of trucks, and so we know exactly how to put it all together, effectively like a Meccano set. And we'll do the same thing. We'll put it into our process plant, build the whole thing all back together, and then we'll just do some tie-ins on our normal shutdowns that we have periodically. So short answer is no, and as a result, no, we're not doing any gold hedging a lot, because we'll be continuing our production in the meantime.
Okay, great. Thanks. I've got the last 2 questions, really. They're pretty much the same. They're just asking, could we talk about share buybacks or dividends, and what's the company's position on that once we look at reaching full capacity? And I think the easiest answer for that one is that, again, really focusing on our growth story, on exploration, looking to develop the mine, optimize and carry out the plan. In terms of dividends, I think any board will look at, certainly ours do, at what point in the future you look at best return to the shareholders, which could be dividend policy discussion, could be investing back into the mine, could be developing exploration, repayment of loans. The balance of all of those is a standard topic of discussion in the board. At the moment, we've got our growth plan to execute before we do that. So I would imagine next year that question would likely come up at the AGM, and we will be in a better position to address that, because it's really delivering on those growth initiatives that will drive all of those things. So the easiest answer is yes, it's always a part of a discussion, but at this stage we've really got to deliver next year's growth plan and keep optimizing this year. So that's the best answer there. And that is the pre-delivered questions that we had. I have some questions that have come up whilst we're online, and essentially one of them is, when will you make the decision on exploration of the mine extension at Coninish and the surrounding areas? Is it 2023?
So short answer of that is yes. As soon as we have our mine up to phase 2 and we become incredibly cash generative at that point, exactly like Sean said, we have multiples of options in front of us. We will always be making sure that we make the best decision for our investors to make sure that they are rewarded. But probably the best way to do that is to grow the company, because of the amount of gold that we fundamentally believe is in the area. So I would dare say that come around about Q2 to Q3 of 2023, we'll be having very, very interesting discussions about our exploration program.
That's great. I have a few questions here. We could probably just answer it, Phil, on the one, but essentially there's a few on SCOTGOLD and Dorae, and what's the status of that, and what are the plans?
Right. So we have, like I've said, through 2021 and 2022, we have been fundamentally focused to get the process plant and the mine to a point where it covers its costs and then more. And like Sean said, for Q2, we are very confident that we are now cash flow positive for the whole quarter, given the amount of gold that we are making. It has been very difficult to take a team of people, like I said, up to about 80 or 90, that have never, ever experienced a mine in their whole life, to be safe and to be environmentally conscious like we are, because we run in a national park. And we have really focused on making sure our training system and our competency levels for these people is, first class, and we, as a result, we don't have shutdowns because of environmental or safety problems. That has been a very difficult thing to do, as well as to do the mine development. So in short, we have been focusing on that to get our concentrate sales up. And we will be then focusing on our Dorae, because it is technically difficult to do. It is not easy, and it requires a large portion of my whole team to be able to focus on that. So when we get to a point where it becomes more stable, which we kind of are almost at now, then we will divert our people onto that and get to the answers, the technical answers, as to where is the gravity gold, where is the gold that can go into our Dorae, and in what form, and what mineralization, and what lithologies, because it's going to be a difficult question to answer.
Okay, great. Thanks, Phil. I've got one here, basically from the announcement today. Optimization initiatives include enhancing mining efficiencies of the underground mine to ensure continuous operation. Can you touch on that again, please? And does it involve, apart from the plan to switch from CAF to long hole stoping, and when do you expect to make the final investment decision on the ore sorter?
Okay, so I'll do this one in reverse. So the ore sorter, we've done the sampling and the test runs, and then we have the visual results. and the visual results are bang on. So if I could rely on a visual results, I'd be making the decision now, but I can't. I have to go through proper lab analysis and the like. So we're probably about a month or two away from that, given the lead times on getting samples analysed. So come into Q3, we'll be making that decision. Going back onto the bigger question on CAFs and mine efficiencies and like, again, this is all about how much development tunneling I can get. So in 2021, the mine was not developed anywhere near it, but now it's developed quite well. Obviously, every single day we drill and blast and mark, drill, blast and mark, and to get more and more access to tunnel to headings. So it is our focus by Q3 into Q4 of this year that I will be doing a combination of cap stoping and long hole stoping. And then potentially by the end of the year, going into Q1 of next year, we will finish with CAFs and we'll just be doing straight long hole stoping. So mine efficiency is all about that. Optimization is all about that.
Yeah, great. Okay, that's all good. So I think really the only other ones are just repeats of when are you likely to pay a dividend. I think we touched on that already, that will be something that comes very quickly once we get into what we call phase 2. Sorry, not that the paying of the dividends, but the ability to does come quite quickly given the cash flow that's generated. So I think that's really deliver on that, and then that will drive us into next year for that decision point as to what the future looks like. But certainly getting there is the happy place, if you like, is where we need to be.
That's great.
Yeah.
Sean, Phil, thank you very much indeed. And thank you to all those investors that have taken time this afternoon to submit their questions. Phil, Sean, I know investor feedback is particularly important to you both and to the company, and I'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, I wondered if I may, Phil, just ask you for a few closing comments just to wrap up. And then, as I say, I'll redirect investors to give you their feedback.
No problems at all. Okay, so we are a mine in the Scottish Highlands. We are the first one of our kind. We have to take our environmental sensitivity of where we work very seriously, and we've also had to train a whole bunch of people or a whole workforce to be able to run this mine effectively and safely within the confines of the environmental restrictions that we have. It has been a very difficult task, and that is why it is probably seemingly slow for some of our investors. But now we have come into 2022 with a very clear plan. We finished Q1 and we did exactly as we said we would do. We opened up the mine so that we could access these caps and access the gold areas. As a result of that, we went straight into Q2, and we are going to hit the top end of our target or guidance range exactly as we said we would. And this then means we become a cash producing asset. From this point forward, going to Q3 and Q4, it just continues to grow and grow as we head to phase 2 levels of operation. Once we get to that point, then we become extremely cash generative. So the summation is, yes, I understand that sometimes mining is a slow game, but once we get there, then we'll have years of good cash generation that hopefully our investors will enjoy. So thank you very much for your patience, everyone. Thank you very much in believing us. And we just hope to continue to deliver exactly as we have always said we would.
That's great. Phil, Sean, thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SCOTGOLD Resources Limited, we'd like to thank you for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant evening.
Thank you.